Judy. Good afternoon, people. It is Thursday, July 4th, 1:15 p.m., Independence Day in the United States. And that big news, of course, is the nomination of Judy Shelton by President Trump to sit on the Federal Reserve Board. And I want to talk about that. I have a lot to say about it. But before I do, I just want to recap this gold market. Driving up to Boston on Sunday night, I noticed gold was absolutely ambushed. Now, we all expected something like this to happen after the G20 meeting, okay? It always seems to get ambushed after a G20 meeting, okay? It's not a coincidence. So once again, they tried to take it down. They used the trade truce as an excuse. That was the narrative, okay? Price moves, and then they have to come up with some lame excuse, okay? So it was the trade truce. Let's get something clear, people. Gold and its price has nothing at all to do with the trade war, in my opinion, whatsoever, okay? Only to the extent that if the trade war or spat or whatever we're calling it these days continues on, all right, that would force the Fed to take action to maybe try to stimulate the economy, which would be positive for gold. So this business, they create this narrative, and if they say it often enough, okay, it becomes truth, okay? Like, what does the trade war and gold have anything to do with each other? Gold is driven by one thing right now, okay? The debt and real interest rates. That's it. Everything else is a distraction, okay? It's just like the myth that gold can't go up in a rising rate environment. But we've seen it time and time and time again. But they think if they can keep saying it over and over and over again, create this false narrative that it will somehow become true. But it isn't. So you have to watch that, people. Okay? So gold was ambushed on Sunday night, down about 25 bucks. They took it down to about 1380, high 1380s, right? They breached that 1400 level. But then what I saw on Tuesday, this reversal, okay? Gold got it all back. Throughout the whole day, it was up $4, $5, $7. And then it just spiked on news. And I wasn't following the news, but I was looking at the price. It was up 18, 19, 20 bucks. It was I haven't seen a day like that in gold in quite some time. And I had just told you in my last video, I think it was, get ready for these moves. $25 is nothing. I had read an article about how it went up $90 in one day. I'm expecting that again. And if people are shaken by $25 down days, okay, and now $25 up days, this is nothing, people. We haven't seen anything yet. So I'm expecting more big news price-wise for gold. Now, it is still way above the moving averages. So it could pause here. It could take a break here. It could consolidate here. There could be some pullbacks here because it is kind of stretched. But we are clearly in a breakout. And I think gold is looking strong. It's going from strength to strength, I like to say. Okay? So we just have to be patient, okay? And just watch it. But don't get thrown off the bull. Don't get thrown off this bull. We're clearly in a bull market as far as I'm concerned. This was a clear, decisive breakout, and my next target is 1600. Okay? So, I want to read something to you. Very interesting. I'm not going to read the whole thing. There's not enough time for that, but I would suggest reading the whole thing. An almost hysterical antagonism toward the gold standard is one issue which unites statists of all persuasions. They seem to sense, perhaps more clearly and subtly, that many consistent defenders of laissez-faire, that gold and economic freedom are inseparable. Gold and economic freedom, and on this day, Independence Day, July 4th, where the United States and everyone should celebrate freedom, right? Gold is freedom. Okay? Gold is freedom. That gold and economic freedom are inseparable. That the gold standard is an instrument of laissez-faire, and that each implies and requires the other. In order to understand the source of their antagonism, these elites, these globalists, these gold haters, that's what this person is talking about. In order to understand the source of their antagonism, it is necessary first to understand the specific role of gold in a free society. Money is the common denominator of all economic transactions. How could we possibly transact in Bitcoin when it's 14,000 one day, it's 9,000 the next day? How is that possible? Explain that to me. Money is the common denominator in all economic transactions. It is that commodity which serves as a medium of exchange, is universally acceptable to all participants in an exchange economy as payment for their goods or services, and can therefore be used as a standard of market value and as a store of value. In other words, as a means of saving. And this person writes a very interesting article, and I'm going to skip over all of it, but I'm going to go to the last page. In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value. Let me read that again. In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value. Now, I believe this to be true, and I believe the person who wrote it believed it to be true at the time. And that's the maestro, Alan Greenspan, right? But what has he done lately, Mr. Greenspan? Did he back up his words with actions? No. He just fell in line and became another central banker, okay? A bankster. So that's what his words say, but his actions speak differently. And this Judy Shelton, who I just mentioned a few videos back, how she wanted to take the interest rate down to zero as fast as possible, okay? Does that sound like somebody who's a hard money person who wants sound money? She could blabber all she wants to now. But when she sits on that board, okay, she's going to fall in line like all the other lemmings. It's just that simple. So everybody's getting steamed up. And, well, we got a gold bug on the Fed. We don't have anything close to that. She's another central bankster at the end of the day. That's all it is. And she was nominated because our president wants cheap money. And she said, if it was up to me, I'd take it down to zero as fast as I could. Cheap money. That's what he wants. And before I forget, I want to go on record. There was a comment on one of the videos how I should give our president, Mr. Trump, a break. Okay? And I want to go on record. I voted for that president, Mr. Trump. And I want to go on record to say, I'm going to vote for him again. Okay? And I want to go on record as saying he's done a lot of things good. And a lot of things I agree with. And a lot of things right. But when it comes to this stock market, this guy's got blinkers on. Okay? Like a racehorse. He's focusing on one thing. Right? This stock market. And he had an opportunity. He called it a big fat bubble when he was running for president. He should have stuck to that. He knew it was a bubble then, okay? But now this is the only thing he cares about, that this stock market continues higher. So he had an opportunity to right the ship. And for that, I will always disagree strongly with that. Now he tweets out, right? China, and I mean, now this tweet, people, I mean, boy, China and Europe playing big currency manipulation game and pumping money into their system in order to compete with USA. We should match, all in uppercase, or continue being the dummies who sit back and politely watch as other countries continue to play their games, as they have for many years. He is right. I mean, he's saying, couldn't be any more clear. He wants to devalue the dollar, okay? He wants the Fed to cut rates aggressively and quickly. He's bringing in this Judy Shelton who said she'd take it to zero. He wants a weak dollar. I don't think he understands. There are consequences. But then in the next tweet, here we go again. S&P 500 hits new record high, up 19% for the year. Congratulations. This is the only thing this man cares about when it comes to the economy. The stock market and this bubble, and keep it going. Okay? Why gold wasn't up $100 on this tweet, I don't know, to be honest. Because he's basically saying, bring it on. Bring it on. Let's have a currency war. All right? And all these currencies are just circling the drain. That's all they're doing. Now, talking about Judy Shelton and bringing it to zero and the Fed and what they're going to do. This is the Fed funds rate going back to 1954, people. Okay? Now, back in the 1960s, it was going up and up and up. Then in the 70s, it went up. Then we had those stagflation of the 70s, that inflation, right? And Volcker brought it all the way up to 20% to kill inflation. And ever since then, it's becoming down and down and down and down, right? Now, what's very, very interesting to me and pretty scary, every time the Fed embarked on a rate hiking cycle, the peak in the Fed funds rate could not surpass the prior peak. That 20% back in 1980, they brought it down. Then they got it to 11.5%. They brought it down. They got it up to 9.8%. They brought it down. They tried again, 6.86%. They brought it down. They got it to 5.34%, right? And look how fast they had to drop it. That was the Great Recession. Now we're at 2.37%. And they're pretty much done with the rate hiking cycle. That's it. That's it. So where are we going next, people? We're going down. We're going to zero. We're going below zero. Total debt, negative yielding bonds is 13 trillion in this world. 13 trillion in negative yielding bonds. This is where we're going. It's clear. I mean, if that chart doesn't speak volumes, I don't know what does. All they could do was get it up to what? 2.5% this last hiking cycle? So don't let them tell you, oh yeah, maybe we're going to cut for insurance purposes. I looked all the way back historically. Very, very, very rare exceptions was it ever one and done. And it's not going to be one and done this time, okay? It's going to be bring it to zero, bring it to negative. They wanted to see more data. Well, here's one thing, that GDP now, Atlanta Fed. Last time I mentioned it, it was 1.5. Now it's down to 1.3. There it is, 1.3. It's going in the wrong direction, people. All right? And there's only 3 more reports that need to be released that's going to affect this number. Now, yesterday was international trade, okay? M3 manufacturing. That brought it from 1.5 down to 1.3. On July 10th is wholesale trade. On July 16th is retail sales and inventories. That's going to be a disaster as far as I'm concerned. And then on July 17th is housing starts. I don't think we're going to get much out of that either. And then the final now forecast for second quarter GDP is July 25th. So there's wholesale trade, retail sales, housing starts. That's the only three things left that's going to affect this number. And I don't see it affecting it in a positive way. Okay? So the odds of a rate cut in July I think it's at least, I want to say 80% for a quarter cut, 20% for half a cut. Okay, it's coming. This is it. The handwriting is on the wall, people. So let's just watch and wait and see what happens. Don't get thrown off this bull, though. Don't get distracted with the noise, people. There's a lot of noise right now. Stick to the big picture. Anyway, it's a beautiful day out there. I'm going to get out, going to spend the day outside. Enjoy it very much. Enjoy this Independence Day. And remember, as Mr. Alan Greenspan, that international bankster, once said, right? Gold is the only safe harbor. It's the only safe haven. Gold and economic freedom go hand in hand. Thank you, Mr. Greenspan. Ciao.